Hi everyone. I'm glad that taking this opportunity provided by Huawei, I can share with you my views on mobile communication and financial services. As we know, the intersection of mobile communication and financial services is mobile payment and mobile money. Today, on behalf of the Boston Consulting Group, I'm going to share some innovative ideas about mobile payment and mobile financial services. At the intersection of mobile communication and financial services, or what we call digital wallet or digital payment services, such business model is very popular worldwide with many brands and enterprises. On the map are brands providing mobile financial services across the globe. Some are traditional financial institutions. Some are emerging mobile payment companies. Some are traditional companies providing mobile payment services. There are also some telecom operators or mobile network operators that provide such financial services. We have some observations around the world. They apply to Asia-Pacific region, including China, Europe, the United States, and Africa, which is a key of our sharing today. Different geographies have different business models due to local regulation and commercial environment, but all business models are tailored to the needs of local customers. Among these business models are 4 categories of mobile payments. The first category is mobile wallet, which does not have to bundle with a traditional bank account. As a mobile tool, a smartphone can be a prepaid wallet or a pre-deposited account, which provides financial functions, such as transfer and payment. Even when there was no 3G or 4G network, phones could be used for such financial operations via the SMS or USSD function of these SIM cards. Nowadays, mobile wallet is increasingly integrated with our smartphone applications. The second category is the so-called mobile banking. In most cases, mobile banking is provided by traditional commercial banks through mobile devices, especially through applications in them. Banks now offer a new banking channel to deliver services to their customers. Such services are usually integrated with bank accounts and include functions such as balance inquiry, fund transfer, and bill payments. They can also be integrated with NFC and pay through NFC readers on site. The third category is aggregated wallet. This applies mainly to equipment vendors or internet service providers such as PayPal and Alipay in China. As a way of aggregation in the front end, such wallet can be used to pay on-site via QR codes or NFC. The fourth category of mobile payment is micro-merchant acquiring. It is a means to accept credit card payments through card readers. These are some business models of mobile payment. From an operation model or systems perspective, we have observed that there are the following forms of mobile payment. Some mobile payment business models have been initiated by banks. Some have been led by telcos or mobile network operators. Some have been led by large internet companies or tech giants. Some are innovative financial services created by fintechs. In the rest of our sharing, I will focus on the operation model of mobile network operators. On this page, the new models such as the bank-like mobile payment models mainly appear in developed regions in Europe and the US. As you know, in Europe and the US, traditional credit card services are very mature. Therefore, comparing with developing regions, their mobile payment services are not as developed as those in China or Africa. For example, In the US, there's a popular mobile payment service platform called Zelle. It was a free transfer service originally launched and owned by Bank of America, Wells Fargo, and some other large commercial banks. In recent years, more and more banks have joined the Zelle network, which provides free interbank transfer with instant receipt. Now, mobile payment function is also enabled in Zelle. Besides such bank-like services, we also have seen some innovative payment services, such as Venmo. It has in fact adopted a business model of social payments. Venmo's services are primarily micropayments. The result of micropayments can be shared between friends through the application, which is a more interesting way of payment. Such social payment services have attracted many young people within a short space of time. Therefore, several years ago, PayPal, which is the largest mobile payment company in the US, has acquired Venmo. This is an observation about some emerging forms of payments, including social payments and bank-led payments. Of course, in China, both Alipay and WeChat Pay were launched by internet tech giants. They have very high penetration rate and huge volume of users in the market. We have also observed another trend. In those places where finance and mobile internet are not most developed, for example, Africa, their mobile payment methods are very innovative. A representative case is M-Pesa. It was first launched in Kenya, and it is now the largest mobile payment platform in Africa. It has even extended to Southeast Asia and Europe. We'll talk about this case later. Across a mobile payment value chain, you may find modules like mobile infrastructure provisioning, which includes mobile network and equipment, mobile money issuance, customer acquisition, order processing via customer interface, payment processing, and financial and non-financial ecosystem for orders and payments. They form a complete value chain. What is the attraction of mobile payment to users in forming such a value chain? We observe that there are 5 key capabilities of mobile payment companies. The first is inclusiveness. As we know, mobile payment has a complex customer composition, and the amount of money it processes varies. To provide easier and more inclusive services for different customers, merchants, and amounts is the first important competitive factor. The second is cost. Mobile payment usually has to compete with other payment modes. How can we ensure that we are better and more competitive in mobile payment fees, such as handling fees? This is the second element. The third is speed. For merchants and customers, it is very important to solve the problem of transaction speed in transfer. The fourth is operability. Mobile payment may need to be interconnected with many transaction forms, such as e-commerce. In addition, mobile payment may need to be interconnected with multiple banking systems or payment systems. Therefore, the deliverability and operability of mobile payment services are also very important capabilities. And the last one, of course, is security. This is because payment is a service directly related to finance. Therefore, user privacy, transaction security, and fraud prevention are all factors that require our attention in mobile payment. Based on the value chain and these key success factors, the mobile payment is about how to be user-centric and generate rich use cases for mobile payment services. We observe that the business models and use cases of mobile payment include the following forms. As it is shown by this picture, on the one hand, a good mobile payment service should facilitate the entire payment process. These processes include consumer-to-consumer payments, such as remittance and gifts, as well as individual payments to businesses and to utilities, such as tuition fees and utility fees. On the other hand, merchants have their payment needs, such as collection, reimbursement, salary, insurance compensation, etc. Merchants also pay from business to business and from business to government, such as taxes. Of course, there are also interactions among governments, individuals, and businesses in finance. These are the products and services in the entire payment process. In addition, some financial and non-financial business services can be grown from payments. Financial services include wealth management, microfinance, insurance, credit points, and so on. There are also non-financial services around financial services, such as mobile phone top-up, e-commerce, and even social networking. These functions can be developed from payment. We have observed some features of mobile payment worldwide. For example, Alipay has some social functions, and of course, WeChat has more social functions. We also see companies that specialize in social payments, such as Venmo. As we mentioned earlier, Paytm, India's largest mobile payment company, is an example of the business development from mobile payment to e-commerce. It is also one of India's largest e-commerce companies. Therefore, in creating innovative mobile payment services, we need to consider how to build a business ecosystem around the entire mobile payment system. As I mentioned earlier, the most active mobile payment in the world actually exists in the least developed areas of traditional finance. Africa, for example, has a population of 1.2 billion, and its natural fertility rate has increased very rapidly in recent years, so its population is relatively young. African users are also very active. Africa's smartphone user growth rate is now the highest in the world. On the one hand, the population is young and the users are very active, and on the other, Africa's financial services are very underdeveloped. We know that in the United States, about 80% of the population has bank accounts that are active in transactions. In Africa, it's the opposite. About 20% of the population in Africa, especially in sub-Saharan Africa, has bank accounts, and 80% do not have a fixed bank account. Therefore, mobile devices such as mobile phones naturally become a very good medium for the penetration of mobile financial services. Here is a typical business case, M-Pesa. It is a spin-off of Kenya's largest state-owned mobile network operator. It was privatized a few years ago. Now its largest shareholder is Vodafone of the UK. M-Pesa is the largest mobile company in Kenya and has an absolute majority of market share in Kenya. We know that Huawei has built the infrastructure of M-Pesa and the mobile network operator in Kenya. In M-Pesa's history, you can see that it was actually first developed because the operator used its outlets to launch microfinance services. In a few years, M-Pesa will gradually become independent from the mobile network business. So far, it has registered users covering the vast majority of Kenya's population, and a significant proportion of financial transactions is traded through M-Pesa throughout Kenya. M-Pesa's average annual transaction volume per user is even higher than the average annual transaction volume of Alipay mobile phone users in China, while it covers the vast majority of Kenya's population. So there's no doubt that M-Pesa is in fact the largest mobile operator in Kenya, and it has become the largest financial services company. Not only that, in recent years, M-Pesa has also extended beyond the border of Kenya to cover all of the sub-Saharan Africa, including Lesotho, Ghana, Egypt, Mozambique, and even gone into some of Southeast Asia and Europe's financial services. So how did M-Pesa develop? In fact, M-Pesa can grow in Kenya because Kenya's economy was relatively speaking not very developed, and therefore the bank account penetration rate was very low. In countries like Kenya, residents and farmers still have strong demand for financial services. These financial services are mainly small loans for living or agriculture. Because M-Pesa is a mobile network operator itself, it has a lot of outlets. In Kenya, banks are available only in large cities, and only residents living in large cities have access to banks. In small towns and rural areas, banks were not able to penetrate, and financial services are not well assured. Africa's vast counties and rural areas are the penetration points of mobile outlets. M-Pesa's sales and service outlets rely on the coverage of mobile outlets. As long as you wish to be an agent of M-Pesa, you can easily apply to open an outlet. Traditional sales outlets only provided microcredit repayment. This was the original intention of Safaricom establishing M-Pesa. Of course, money comes in and goes out. Throughout the financial services process, Kenya's social pattern is that men earn money in the city and women live in the countryside. So at M-Pesa, they increasingly find that men save money in their mobile accounts through M-Pesa outlets in the city and send money through text messages, with the password obtained through the gateway transferred to another mobile phone. In this way, a very simple SMS message is used to complete the remittance from a mobile account to another mobile account. And then in a rural home, the woman gets the remittance. Here, the mobile phone serves as a bank account, while the mobile SMS solves the complexity of traditional bank account settlement. In this way, starting from the remittance scenario or pain point, M-Pesa expanded rapidly in Kenya. This money transfer tool has also evolved with more payment functions, such as paying tuition fees and bills. M-Pesa has even incubated the largest new mobile business model in Africa, which I'll introduce later. Today, M-Pesa is interconnected with mainstream mobile payment systems around the world. For example, M-Pesa is interconnected with PayPal in the US and Alipay in China. But it is not only that. Because M-Pesa is a payment tool with an ecosystem for residents. It is a de facto social security fund in Kenya and a tool for social credit assessment. In this sense, it is like Alipay points in China, a tool for personal credit evaluation. M-Pesa has become an increasingly important credit assessment tool in sub-Saharan Africa because its coverage, penetration, and share of all payment channels in Kenya and sub-Saharan Africa even exceed those of Alipay in China. M-Pesa is not only growing rapidly in Kenya. On this page, we can see that M-Pesa has expanded into other African countries and regions in various payment scenarios. In different regions, the mobile financial services it provides are not exactly the same due to different local regulations and consumption habits. However, in different countries, it actually covers one or more mobile financial service scenarios. In conclusion, why did M-Pesa succeed? We see these key success factors. The first is to invest in a very powerful network of agents. The traditional way to quickly develop and serve users in developed regions is through banking outlets. So today, if we do not have a bank account and use a cell phone instead, we need to develop a network of outlets and agents. The second is to focus on consumers and design real consumer hook for different markets in order to develop users and ecosystems. As we mentioned earlier, M-Pesa developed in Kenya through microcredit repayment. However, in other regions that M-Pesa has entered, such as Tanzania and Mozambique, the main business scenarios are bill payment or remittance from cities to rural areas. Different scenarios form the corresponding product development hook for each country. The last is how to meet compliance requirements during market entry and development. Finance is a highly regulated industry. When developing in different regions or countries, you need to design your products and services based on the local financial regulatory requirements. As I mentioned earlier, we need to expand the ecosystem from mobile payment services. M-Pesa is a very famous example. Do you know what else Africa lacks besides money? Electric power. Africa is a very underdeveloped region of the world in terms of energy. The so-called off-grid power consumption means that batteries are used when there's no power grid. Where does the energy of battery come from? Mostly the sun. This is the demand for electricity in many poor areas. In addition to traditional solar power, in sub-Saharan Africa, the main source of lighting and heating power may be electricity from diesel generators. As we all know, diesel is relatively expensive and is not environmentally friendly. In recent years, there has been a fast-growing enterprise in Africa that is regarded as the Tesla of Africa. It is an emerging solar company developed and incubated from M-Pesa, called M-Kopa. By name, M-Kopa and M-Pesa seem to be brothers, and so is the fact the founder of M-Kopa is the founder of M-Pesa. Learning from their business success in mobile payment, they have figured out how energy services can be provided to people in underdeveloped rural areas and small towns in Kenya. So they designed a pay-as-you-go business model for the payment of electricity. M-Kopa offers a set of core kits, including solar photovoltaic panels, batteries, light bulbs, chargers, among others. If you buy these kits separately, it may cost about 1,000 or 2,000 RMB. Because you are using M-Pesa, you have earned your payment credit. So a mobile SIM card is also included in the solar kit that allows you to remotely control it. If you do not pay your electricity bill, after a while, the company might remotely shut down your device. But when it gives you the kit, it gives you the equipment as collateral based on your past payment credit assessment. Subscribers can use the M-Pesa account to pay for electricity every day. Mobile-to-mobile payment is an extension of payment. Because Africa's economy is relatively underdeveloped, its residents do not have many savings. They just spend as much as they earn. Therefore, this method can well meet the electricity demand of low-income people. M-Kopa has developed very quickly. It does not only meet traditional core battery packs and lighting needs. When you have used M-Kopa's kits and build up some credit scores, it can even increase your line of credit and offer you more entertainment devices, such as TV and radio. Not only that, M-Kopa also accumulates credit points for you, which facilitate your access to more financial services, such as agricultural loans. M-Kopa started its business in 2012 and 2013 and has sold more than 1 million such solar systems in Africa and received more than 100 million electronic payments, creating great social benefits throughout Africa. Therefore, the investment community, the society, and the government all consider this a very benign business model that is very conducive to economic and social development. Moreover, better access to electricity for the low-income people in Africa also contributes to cultural development. This increases the overall literacy rate, creating great social benefits. M-Pesa is actually expanding from mobile payment to more products of mobile business ecosystem. It has the following key success factors. Firstly, it has a better way to promote in the rural market. In the early days of Alibaba and Alipay, they also used on-ground marketing. In fact, tools like M-Copa need agents and sales representatives to sell their products throughout rural Kenya. Of course, it is very important that because of the mobile payment tool, you do not need to make a face-to-face currency transaction with a salesman when you buy a product, which ensures the safety of our business and money. After receiving the product, the user only needs to pay a small amount of prepayment. The subsequent payment is made online through M-Pesa. Please note that this kind of online and offline transactions are more about using text messages than 3G or applications today. Secondly, the product is very cheap and brings good social benefits. In addition, M-Copa provides good after-sales services and call center services. Since you pay through mobile phones, your phones not only provide the payment function, but also provide service communication channels. Finally, the platform is based on an entire chain of financial services. The payment, credit accumulation, and microloan are all in this new hybrid and mobile-based business ecosystem that integrates finance with products. How can we make such mobile payments that are economically and socially meaningful? Let's talk about how you can better design a financial service product based on what we've seen as a consulting firm. These cases are about disruptive banking services for young people. We emphasize that all digital products must be user-centric in product design and innovation. We focus on the core needs of these teenage users in our product creation process. However, young users have many core needs, such as learning and entertainment. Our focus here is on travel. We focus on the user journey of a traveler and find related opportunities, such as accommodation, air tickets, and catering. We look for the financial service points around a traveler's journey and provide corresponding deposit and payment services based on these financial service points. To design such an innovative financial product, we use a process of innovation sprint. The process includes what we call design thinking and agile methods. The whole process includes concept definition, user-friendly design, and user behavior analysis. Based on user behavior analysis, we draw a logical thinking framework to come up with ideas. And based on these ideas, we can prototype usability, conduct user tests based on the prototype, and set the priorities of all digital products. Eventually, we build it into a prototype product that will be launched to the market and end users. This is the idea of how a digital product is created. That's my introduction to the financial product innovation and the product creation process of mobile payment. Thank you.
My name is Mike Denoma. I am the CEO of KBZ Bank in Myanmar. I've been there for almost 3 years. Just as a brief background, I've been an international banker for decades, working for Citibank, Standard Chartered, China Trust, and now KBZ Bank. Okay, what we're talking about today is what we see as the early stirrings of either banking evolution or revolution, depending on your viewpoint. The next quote is interesting. This is by Thomas Kuhn. He's wrote this book in 1962, The Nature of Scientific Revolutions, and is that to reject one paradigm without simultaneously substituting another is to reject science. So what we're going to try to do today is not just reject the banking paradigm as it relates to fintechs and other innovations. We're going to try and substitute a paradigm for it, right? So that will really be the objective today. What we're going to do is take you back to 2018. And what I'd like to do is put you in the same situation that I faced, that our senior team faced at that time, so that you can get a feel for the actions we took and the results that we achieved. So first, just as background, Myanmar has one of the lowest branch penetrations in the world per 100,000 adults. In addition, it has one of the lowest ATM penetration per 100,000 adults. Also, less than 40% of adults have a bank account, and less than 40% of the country is electrified. For example, at least half of our branches are on generator sets 24/7, which in most cases, the normal banking business model assumes electrification, as do most business models today. In addition, another complication is out of our 18,000 staff, not one of them had a job description. There was no back office centralization, and there were really no standard operating procedures. The country had military rule for 50 years, and so it was really closed off from almost any banking innovation for that period of time. Virtually all the industry, value chains and supply chains were immature, and not only that, there are significant enemies at the gate. Big global payment companies were talking to participants in Myanmar, and foreign banks were also entering. But there is some good news. Smartphone penetration is nearly 100%. The country had the last mover effect benefit in that no feature phones were ever introduced. They started off from day one with all smartphones. Myanmar has one of the lowest data costs per gigabit in the world. It's in the lowest 25 countries in the world. And urban downloads are double that of Singapore, which is the sort of known as the smart nation. So smartphones are ubiquitous throughout the country. Data is cheap, and people use it. They use it extensively. One other thing in our favor, or in the favor for this situation, is we're the clear market leader. The bank has a big heart and a big ambition, and it has a vision of achieving 100% financial inclusion in the fastest time ever, which if KBZ Bank could do it in less than 10 years, that would make it the exemplar. So what do? You're in that situation. Branch penetration is low, ATM penetration is low. You have an unsophisticated sort of workforce. They're committed, but unsophisticated. The market is immature. It lacks electricity, and it lacks highways and roads in many places as well. And you got enemies coming. So what do? 4 choices. Choice 1, you can do what bankers always do. You do more of the same, but you add your little tiny twist to it. Option 2, you can start with a clean slate and you go big with new partners. Option 3, you put out yet another digital bank offer among the many, many digital bank offers out there today. Or 4, you keep your resume current and just post a lot of cat photos and complimentary sort of messages on LinkedIn. Now, none of these are easy choices, but we decided start with a clean slate and either go big or go home. Now, if you're going with a clean slate, what design thinking should guide you? The advantage of a clean slate is you can create something innovative and distinctive. And given what's happening in the world today, there are a lot of design sort of thinking criteria that you could take advantage of. One, you could take advantage of is software is eating the world. Mark Andreessen put this out, and his view was eating the world meant that the companies that relied on mainly software development engineering would be the ones that acquired others, and that certainly came about. Another design thinking criteria you could have is that data-driven machine learning and artificial intelligence will eat software. And that is that while software is important, programming now with ML and AI is even more important, which is what we're seeing today. You could also look at mobile distribution as king, maybe not only king, but King Kong, that it is critical and that distribution on a mobile handset is the key to almost every business model, certainly on the e-commerce side today. Fourth, you could say geospatial intelligence can help you win. This is perhaps the newest area. There's no bank in the world that uses it. I think there's no wallet in the world that uses it, maybe to the degree that it could be, but this is another thing you could put in, or you can go for all of the above if you're really aggressive. So what we thought about is we thought, okay, no guts, no glory, let's go for all of the above. And that's what we did. But to do that and really go for all of the above, given the situation that we face, that you face in this particular situation or circumstances, is that you need a partner. And you need a new partner or partners that can deliver a number of things, a number of essential components. You need a world-class mobile wallet with instant real-time 24/7 payment rails. For comparison, the United States, most of North America does not have real-time payment rails. Many European countries don't have real-time payment rails. So this is quite distinctive and advantage, but it's a requirement. Second, you would need an agent and merchant app, an agent banking and merchant app with the same real-time payment rails. Again, 24/7, instant, real-time payment rails with a distributed ledger that has a unique transaction code for both sender and receiver that you can sort by time, by date, by type. Third, you would need mobile, paperless, full KYC biometric onboarding for all these customer sets. In a market like Myanmar, paper would be probably the death of you to try and execute this on a paper-based model. So the idea was not only do you need a fully functioning e-wallet that's advantaged, not only would you need an agent banking app and merchant app that's advantaged, but you would need full biometric KYC onboarding. Last, if you really want to use geospatial data, you're going to have to divide the country into up to 500 geospatial units, and create territories. So what would have to happen is you'd have to have a partner that could support that on the geospatial end, and then you would need partners that could provide daily feedback consoles for every employee that you have, all 18,000, by geospatial territory. So now this is a large ask, and there are very few partners in the world that can do this, and very few partners that can do it in an agile way. And fortunately, Huawei is one, if the only partner that can do all that. So you partner up and you launch KBZ Pay on October 1st of 2018. And to meet your design thinking criteria, you launch with a blue app for consumers, you launch with a red app for agents and merchants, you onboard your 18,000 employees, employee agents, you divide the country into 412 unique geospatial territories, you communicate that to everyone in your bank. Every employee from top to bottom has identical onboarding goals quarterly. So for example, I had the same onboarding goal as a frontline employee. We each had to onboard 30 customers quarterly at the outset. So it's probably the first democratized set of goals in corporate history where the CEO, the deputy CEOs, all the senior management, as well as the frontline employees all had the same identical objective, and that is to onboard paperless with full KYC customers. And then what we did is we had full KYC paperless onboarding on the mobile, so everything on the mobile. So you may be wondering, wow, these are big ambitions, and the starting point wasn't exactly advantaged, so could they pull it off? Well, fortunately, because of our partner, Huawei, in most respects, we did pull it off. So what were the results? Today, 2 years on, you faced all those situations, you designed the design criteria, you partnered up, what happened? Well, fortunate to say, you have 6 million downloads, you've doubled the customer base, more than doubled the customer base of the institution. You've signed up 45,000 agents, which has increased your branch distribution capability 90 times. And this is what's quite amazing. Agent banking allows agents to take deposits and execute withdrawals. So it's an extension of a banking branch or ATM network. So we've increased our branch distribution by 90 times, which makes us almost twice as large as the largest branch infrastructure in the world, which I think is the Agricultural Bank of China with 27,000 branches. So even though a country with 55 million people versus 1.3 billion, we now have a distribution capability that exceeds the largest bank distribution network in the world. We also have 245,000 merchants. Now, this is 5 times the coverage of what the leading fast-moving consumer goods companies have in the country. So in that basis, most of these companies have no more than 50,000 outlets for distribution. So we've got nearly 5 times that. In addition, we've passed 200 million transactions, and the majority of those are executed with 6 sigma quality, which is less than 3.4 defects per million. So it's less than 3.4 defects per million. If any of you look at your defect rate in banking, it is lucky to be anywhere near probably even 3 or 4 sigma. And we're now beyond US dollars $1 billion in monthly transactions, which in a Myanmar case is over 1.5 trillion job in transactions monthly. So look, sometimes stuff works out, sometimes things happen. And this has been an interesting success. But what have we learned? We've learned a number of things out of this, and the results are outstanding, but a lot of people sometimes can explain those away for lots of reasons. But the things we've learned, I don't think can be explained away. And if there's anything we want you to take from this presentation, it's that learning, and maybe how it can apply to your situation. The first is that financial inclusion doesn't mean a lending account. Financial inclusion means a free, instant, real-time payment account on a mobile phone with full KYC biometric onboarding. So what you're allowing is somebody for free to enter the financial system with an instant real-time payment account. That is financial inclusion. And it doesn't exist in many developed countries around the world today. Financial inclusion in many countries is expensive for the participant. The second is that an instant mobile payment approach of this order is superior to almost anything banks currently offer. Having agent banking, where you can do withdrawals and deposits at 45,000 additional outlets, would be more than any country in the world in terms of banking distribution for deposits and withdrawals. And an instant mobile payment mechanism that's free. Again, those two combined make this better than any banking offer currently available in the world today. And it's something that I think any bank should look at. Third, that banking physical distribution can be expanded up to 100 times with the use of agent banking approach. The agent banking approach was innovated in Africa, which is interesting, with M-Pesa and others, but it applies almost anywhere if you think about it, and it can apply to any country. So if you're a medium-sized bank in any country, this can provide an advantage on the distribution side that was never, ever possible. Next, geospatial intelligence with an app linkage is a potential to revolutionize supply chains and value chains in Myanmar, but also beyond. Almost every value chain and supply chain today is inefficient with non-straight through processing. So these linkages could literally allow payment before something is manufactured. You could get rid of receivables along an entire value chain in almost any country. So the other interesting thing about instant real-time payments is that it provides manufacturers and companies in different aspects of the supply chain with instant real-time information. This is extraordinarily powerful in judging demand, judging necessary inventory, judging necessary manufacturing sort of input cost and inventories as well. So not only do you get instant real-time payment, but if you're a company along the value chain from a cash management perspective, you get instant real-time information, which is extraordinarily valuable, I think, to the CFO and the treasurer. And maybe the last point is the last mover effect can sometimes provide unrecognized advantages. The only reason we've been able to come up with this new paradigm or new combination of elements is because Myanmar has been hidden from the world for the last 50 years and didn't get the opportunity to take any of the banking innovations up until now. So it comes out of the fog after 50 years, and it can take advantage of the latest technologies and the latest approaches. So that's pretty much it. We invite you to come to Myanmar, and if you have any suggestions of how to help, we will welcome them. And if you have any questions, feel free to send them along to Huawei, and we'll try to get back to you and answer any that you have. It's been my pleasure to talk to you remotely, and please stay safe.
Hello, this is Chen. I'm Chief Digital Transformation Officer of FSI Huawei Head Office. Okay, today I think it's my pleasure to present the last session. Okay, the topic is Mobile First, Drive Digital Transformation. All right, I think in this chart, what I'm going to say is the economy after pandemic. You see, we can find this is the structure. Actually, you can find left-hand side, there is the CN, right? And they go through the super app. That means the mobile super app, right? So the traffic goes through the super app, and then the super app actually support the B, big B, okay, capital B. Or this big B, behind the big B, they have many supply chain, right? They're upstream, they're supplier, logistic, that sort of things. All right, so this is a kind of new digital economy structure. Actually, it's happening in China, and it's innovate so quickly. So everything, all the spending from the consumer to the super app and go through the super app, get into the merchant, conventional retailer, and some merchandising, what they sell, right? And then the supplier on the back end. So you can see the whole digital process, digital economy. They are innovate. They are very quickly. They are innovate very quickly, very nimble, very agile, right? So everything goes online. COVID-19 forced a lot of business, especially some small business unit, right? They have to go online. Otherwise, they were losing the customer, right? In those kind of business model, those kind of digital economy, you will find that all the information, they flowing go through the super app to the B end, and they support all the daily life, everything, almost everything to the consumer. All right, all of the services. So this is the new digital economy in China, and very interesting. We can find that as a bank, when we're facing the new situation like this, right, all your customer is changing. How are you going to do that, right? So this is a chart. One of the bank, actually in China, right? So they have to adapt to those kind of business model, right? Mobile first, why it's very important? Usually bank have many different kind of channel. For example, you have ATM, you have branch, you have call center, that sort of things, right? But after whole economy become a digital business model, you will see that people using mobile phone, they do not using cash, right? And once they're using mobile phone to do most of the things that the bank have to, shifting their, operation, their channel, their business operation model into business as a platform, right? So bank can migrate their application, their app, mobile app, in not just the channel, right, into a platform to support the whole financial services, the whole bank as a services infrastructure. So left-hand side, you can see that, when the bank, serve the customer, they provide different kind of services. For example, government services, right? Healthcare and wellness, transit, education, or conventional retail purchasing. That's kind of services, right? So everything put in the super app, the mobile app architecture. And then you gain the private domain traffic, of course. This is the new, you have to adapt it to new digital economy, right? So on the right-hand side, on the traffic, on the top of the traffic, bank, start to develop, digital financial services to serve to the customer, provide to the customer, right? So behind the live services on the right-hand side, to create the traffic, right, in the app. So, behind this, all the financial services will become digital. For example, the payment, the credit, lending, mortgage, wealth management, private banking. And then later on, even we can put the corporate banking services, because corporate also hook onto this digital economy, operation, right? So you can see the supply chain, corporate banking services, even your government, customer also can join in this super app architecture, right? So this is a new way to think about that, how as a bank to do the business, as my experience, right? When I used to work in China Merchants Bank, I see that most of the customer, when they do not using cash, they do not using bank card. As I can see, almost 100 times of traffic they go to app, not go to conventional, branch or ATM or those kind of channel. And even you see the call center services also can through the mobile app. You can using the mobile app engagement platform to support all kind of services. All the financial services will become a kind of a journey. The journey can redefine your bank as a service. So when most of the bank they're talking about cloud migration, migrate their mainframe system to the cloud, right? It's not just very simple. You migrate your mainframe to the cloud. You rewrite the code on the cloud only, right? Because cloud basically is support the internet business. So it's got to be in the mobile app, right? So what I'm going to say is you have to redesign your whole banking, whole product into a journey services, right? So the customer can go through your journey, go to your mobile app, right? I think as when you develop, you run an app in the bank. Basically, if you just supply the financial transactions activities on the app, that's not enough. Because the more mobile have more and more features, which bank do not utilize this, right? Just like in previous page, you can see that the whole digital economy, right? They all get on the super app architecture. So technology enable any bank can create such kind of super app infrastructure to support your financial services and also include live services for the customer. And behind the live services, it will link all of the corporate banking in the future. So that's the way, other internet giant, actually they do this way, right? So I think in this chart, I just roughly described the infrastructure or the, technology architecture, and also, how we, make your business become so agile in this situation, right? So you can see on the right-hand side, the digital infrastructure. I think the infrastructure actually conventional is cloud, 5G, mobile, data, that sort of things. And I believe the direction of the cloud computing is going to be more, united, more consensus compared with before. For example, recently, most of the, cloud computing is moving to the, container, Kubernetes, and big data, cloud big data infrastructure, right? So I think the technology is going to be more united, more, going to have a de facto standard. And I think this is good for the bank. You don't need to, deploy, try different kind of things, right? Based on this infrastructure, I think what bank need to do is redesign your customer journey and create a digital product platform, which what I'm going to say is really business oriented. It's driven by your marketing business people to redesign your customer journey, right? Based on the new technology, microservices, those kind of infrastructure, right? And then on the top of this, I think, HTML5 is it's become so popular, simple and easy to develop the application, right? Develop the program, develop the campaign, all right? So when you have robust product platform developed by microservices, then you can export the API, and to the internal developed platform, right? Or you also can have external developed platform. The difference is how you control the security, how you redesign your process, right? Approval and let your, branches or the outside third parties or, your e-coupon can using those API to develop the application. So I think the app actually is not just on the mobile side, right? On the cloud side, you need to using new technology, redesign your, products. So, in the mobile, you can, engage to your customer. On the left-hand side, you can see that. So customer can very simple and easy to using your mobile phone, right? And I think super app is one of the reasons why it becomes super app, because the customer do not want download more new apps, they are used to using such kind the apps what they used to use, right? So to sell an app, it become more and more difficult to individual. You can see this is the trend on this. So super app become a very, very good idea to let your customer can, just very used to using that app and extend to other features. So on the other hand, in your super app architecture, you also can connect to build up an ecosystem, connect to the transit. You can share the customer. For example, in China, as a bank, if you have enough customer, you can export your customer to other app to provide the financial services. For example, your wallet, your purchase services, right? So your partner can very simple and easy to access the financial services, right? To improve their customer experience as well. On the other hand, through this kind of business operation model, you also can gain your corporate customer, right? You can increase, enhance your customer services, gain the new business on this kind of ecosystem, right? I think this is the a kind of journey of app. So in this chart, what I'm going to say is the technology is not a static, all right? It's moving very fast, very quickly. So this chart is mentioned about how the app evolving in the past several years. As we know that iPhone released on the 2007, right? Until now, it's only about 14 years. But you can see that the app already have several generations. So left-hand side, you can see in the early stage, app is very difficult to develop, right? The mobile performance is not good enough. So I think the power needed to improve. So usually every institution, like the bank what I worked before, we have several apps because some business unit will develop their app. And later on, we migrate this into single digital IT basis, because once you transform all the user into a single digital ID. Then you can start to develop shared services through app. That means you can write an application for the app and very simple and easy to share to other apps as well. So I think you can find those kind of example, many in the China. All right. So so you have several apps. Doesn't matter on this because it will reduce your technology effort and also create a kind of super app architecture. So recently you can see there are several apps architecture here. On the app is, we call it super app architecture, right? So you can see that you export the API, mini program, allow third party, allow your internal branch, internal business unit, right? They can develop their own application. So that made your organization become very agile. And next one is shared services. That means you develop a service, develop an application, develop a product can simultaneously share to many apps. Right? So this is not a problem, right? Today, I think it's become more and more mature. Right. Another one is you can embed it to other apps services, make your app a kind of different kind of super app architecture. I think this is very important as I mentioned for the bank, right? Because your corporate customer usually they have their app, right? If you wanna do business with other corporate customer, corporate client, right? You can embed their app into your app. So your customer can also access your corporate customer's app, right? So, it's a kind of business model. As a bank, corporate your customer, consumer is your customer. So this is a way to do business, right? Next one, I think the bottom is joint membership. It's a kind of try, right? I think it's also very interesting. Within your app, you can, solicit your corporate clients' membership program within your app. So your app can directly access the membership program directly. So it's a little bit like Copernicus card before, but it's different architecture because if the customer do not using card, then there's no way to have corporate banking, corporate card, right? So you have to think about different way to different business model on the app, right? So I think this page is the final page, what I present, on this session. What I'm going to say is technology is moving so fast, especially in China. There are very interesting business model, which is significant or quite different from the rest of the world. Our social platform actually drive from instant messaging system. In the early stage, this instant messaging system actually they are replacing the telecom services, right? So you don't need to pay money. You can send short message. You can talk to people, and then you can create group chatting and that sort of things. And then later on, through the technology innovator, you can share. You can use voice. You have photo. You have video. You can share your map location. That sort of things. They create pretty robust engagement system. All right, and then they export this to the bank. So if bank can leverage those kind of instant messaging system, they can totally redesign their call center services and also redesign their bankers to engage to their customer directory, right? Or their IM to engage to the corporate client directory. So what I'm going to say is this is very typical mobile infrastructure actually that they provide very rich information. All right, then next stage when they get into the digital payment, you will see just like WeChat, all right, they developed the scan QR code, and then develop P2P, which is so popular because their population, almost reached to everybody. Then they developed the e-wallet. Then they have red packet. They offer many different kind of game, funny way to deliver the financial services, which is totally different from what we think as a bank before. I think, digital payment actually, shifting the paradigm of just social and get into the financial, right? Once the social platform, they equip with, payment features, then you will see that they can very good support the business side. Especially what I mean is the merchant side, right? So they can, through technology, export the mini program. They allow them to write their business logic in this super app, right? So they can through mini program can do the campaign, can order food and everything. So you will see it's become close-end ecosystem, and it's very, very large. Underlying layer structure actually is instant messaging, which is always connect, always engage. So the customer behavior also changing on this. So within this platform, we can see that there are many new business models be innovated. For example, a group buying program, right? They can offer e-commerce directly from, producer to the consumer, right? And within pandemic, they also develop some, compound, community. They can do the group buying program, right? And so what I'm going to say is mobile technology always connect, all right? And engagement, instant messaging system, with social. When they get into the financial services, actually they bring so many different kind of new business model, which we never think it before. So I think at the final, what I'm going to say is, as a bank, as a financial services, all right, in the digital economy, I think the boundary is broad, right? To using the social platform with payment and then those kind of infrastructure actually bring us have many different kind of initiative. Probably you can try innovate very new financial services in the future. I think thank you, have this opportunity to present my idea in this session. I hope this will help to you, in the future have more, new idea to develop your digital financial services. Thank you very much.